Ulta Beauty reported earnings last week and the stock popped 14% before giving back some of those gains. Right now, the company is worth $16 billion with $700 million of cash on the balance sheet and no debt. The enterprise value is $15.3 billion. Revenue over the last 12 months comes to $11.3 billion with $1.2 billion of net income and $964 million of free cash flow, meaning the stock is valued at 13 times earnings and under 16 times free cash flow. 13 times earnings is near the bottom of the company's historical range. Fiscal 2024 was a disappointing year for Ulta, with sales increasing less than 1% and net income falling almost 8%. The company is battling increasing competition and suffering from a slowdown in the beauty market, which boomed during the pandemic. However, there were signs of improvement in the fourth quarter as revenue and earnings beat expectations. In fact, diluted earnings per share in the fourth quarter looks like it's a new record, and that's a result of significant share buybacks. The company repurchased $1 billion worth of stock in 2024 and still has $2.7 billion left on its stock repurchase program. But despite some positive signs, the company also delivered weak guidance. 2025 now looks to be another transition year, with earnings per share expected to fall 9% and revenue expected to grow less than 2%. And it's clear that Ulta is under pressure from a saturated market and intense competition. New CEO Keisha Steelman said that the competitive environment has never been more intense. She said that more than 90% of Ulta stores have been impacted by the opening of competing stores over the last few years, and 2/3 have been impacted by multiple competing openings. This competition explains why Ulta has been struggling to maintain its market share. Even so, an investment in Ulta Beauty can still work out if the company executes its long-term plan, which includes expansion overseas. The company anticipates long-term revenue growth eventually getting back to 4 to 6% a year and earnings per share growth in the low double digits. And if you assume Ulta earns $23 a share in 2025 before growing EPS at 11% a year for the following 4 years, an 18 times multiple would then put the stock at 628, which works out to an annualized return of 12% a year. Any positive surprises would therefore significantly boost the stock. Ultimately, though, Ulta Beauty needs to prove that it can regain market share and expand overseas successfully. The stock is beginning to look attractive.